And precious metals are stunning markets. Late on Thursday, the precious metals saw a pullback after investors booked profits. The rally resumed again on Friday. Gold fell to a low of $5,330 after hitting the all-time high of $5,594. Still, the yellow metal is on track for its best month since the 1980s. Silver, platinum and palladium also dropped sharply on Thursday, but have since recovered, and demands remain strong from crypto investors, central banks and large funds. UBS has now raised its gold forecast to $6,200 for early 2026. However, experts warn that the markets are volatile, sensitive to speculative money, geopolitical tensions and Fed policy expectations. Gold prices have surged past $5,500 per ounce, extending a strong rally that began in 2025. Silver has also kept pace, approaching $120 an ounce as both industrial and investment demand surge. But the gains aren't limited to just these two. Platinum, palladium and even some base metals have soared as investors seek safe places for their money amid global uncertainty. Shortages in physical supply, strong portfolio flows and rising inflation expectations have pushed investors towards precious metals, making the markets highly sensitive to any news. Experts say the metals market is showing unprecedented volatility. Prices are swinging sharply, and not just because of supply and demand, but because of big inflows of investment money chasing returns. Investors are piling into gold and silver for protection against geopolitical tensions, rising government debt, and uncertainty over interest rates and currencies. Central banks have also increased gold reserves, contributing to the strongest prices. Meanwhile, experts caution that such rapid gains may not reflect fundamental supply and demand. Some market experts warn that the precious metals market may be broken, with speculative flows driving prices higher than physical demand would justify. Analysts warn that the price jumps are increasingly driven by investor money and not actual supply and demand. Metals are acting like a parking place for excess cash flowing through markets, which can exaggerate price swings. Some experts also suggest that smaller metals markets like silver and platinum are more sensitive to speculative money, which means that their prices can rise fast but could also fall just as quickly when investors take profits. Some experts say the surge shows more speculative capital is in play, but price discovery, funding the real market value, hasn't disappeared completely. Part of the precious metal rally can also be contributed to a weaker US dollar because these metals are priced in dollars, and when the dollar drops, gold and silver becomes more expensive, even if nothing else changes in the market. As gold and silver continue to climb, investors face both opportunities and risks. And while these precious metals offer a safe haven, the rapid surge means that market participants must watch for volatility and potential corrections.